Welcome to this deep dive. Today we're going to unpack three companies that our sources are highlighting as potential growth opportunities, even with all the market volatility we're seeing.
Right. It's definitely a tricky environment out there. So finding growth stories requires a bit more digging.
Exactly. Our goal is to make these ideas clear based on the investment text we're drawing from. So let's get straight into it.
Sounds good. It's interesting to see which companies our sources think are, well positioned to navigate these choppy waters.
Okay, first up is Crowdstrike. The ticker is CRWD. The text presents them as a pretty dominant player in cybersécurity.
Yeah, and cybersecurity is one of those areas, isn't it? The need just keeps growing, almost regardless of the broader economic picture, because, well, cyber attacks aren't stopping.
That's a great point. It feels essential now, and the source highlights CrowdStrike's recurring subscription model.
Which investors usually like. It gives a level of predictability, consistent revenue streams, customer loyalty. It builds a solid base.
And speaking of solid, they mention a really impressive gross profit margin, 80%.
80%. Wow, that really stands out. It suggests they've got significant pricing power or maybe just a very efficient model. Hard for others to compete with that kind of margin.
Definitely catches the eye. The source pegs their market cap around, what, $94 billion? And the stock's up about 20% over the last year.
So decent performance in a tough market. That ties into the 80% margin, perhaps. Show strength.
It seems so. The source also gives a target purchase range between $300 and $340 a share.
Okay. So they still see potential upside from current levels based on their analysis.
Right, and they really emphasize CrowdStrike's resilience, its ability to hold up against market swings, performing better than the global index.
And that's key for listeners, right? In uncertain times, finding companies that not only survive, but maybe even outperform the average, that suggests some underlying strength.
Exactly. The source seems to frame it as a potentially solid long-term choice in a sector that's just constantly in demand. Might offer some stability.
Yeah, a core holding type idea, maybe in a high growth area. Makes sense.
Okay, let's move to the second company they highlighted, Zscaler, ticker ZS.
Right, another cybersecurity name, but with a slightly different angle, isn't it?
Yeah, they specialize more in cloud-native security and zero-trust solutions.
Which is fascinating. It shows how the cybersecurity space itself is evolving. CrowdStrike might be seen as maybe a broader leader, while Zscaler focuses on this very modern cloud-centric approach.
And that zero-trust concept, it's everywhere now.
It really is. The idea being essentially don't automatically trust anyone or anything on the network. Always verify. Crucial with remote work and cloud data.
So the text points out that both CrowdStrike and Zscaler, despite maybe different niches, are benefiting from the overall expansion of the cybersecurity market.
Absolutely. It suggests the pie is big enough and growing enough for multiple strong players with different specializations. It's not necessarily a zero-sum game.
Good point. For Zscaler, the source notes a market cap of about $31 billion and stock growth of 7% over the past 12 months.
Okay, so smaller than CrowdStrike and less stock growth recently. But what else did the source highlight?
The big thing seems to be the revenue growth expectation. They're forecasting something like 20% per year for the next few years.
Wow, 20% annual growth. That's pretty aggressive. That's significant.
It is. And the target purchase price here is suggested between $150 and $165.
Right. So the source is likely emphasizing the demand for Zscaler's specific, innovative solutions in cloud security and sees potential for the stock to appreciate based on that strong growth outlook.
Yeah, they mentioned positive analyst forecasts and, again, that recurring revenue model as signs of a potentially secure investment in a growing field.
So maybe a different kind of growth opportunity compared to CrowdStrike, more focused on that cutting-edge cloud security angle.
Seems like it. Okay, interesting. Let's move to the third one. Advanced Micro Devices, AMD.
Okay, shifting gears now. Semiconductor.
Exactly, a major player there. And the source links its potential strongly to the growth of artificial intelligence, AI.
Which makes sense. AI runs on powerful chips, and semis are the backbone of, well, everything digital now. AMD's definitely positioned to benefit.
But the source also flags some risks here, doesn't it?
Yes, specifically the geopolitical stuff, tensions with China, tariffs. Those are real factors for the semiconductor industry that you can't ignore. Supply chains, market access, it's complex.
Definitely adds a layer of uncertainty. Still, the text highlights AMD's impressive revenue growth historically and improvements in efficiency.
And that's important. If a company can grow and become more profitable even with those headwinds, it says something about its management and its position.
They point to the EBIT growth specifically. Earnings before interest, taxes, depreciation, and amortization, a measure of operational profitability.
Right. What were the numbers?
It went from about $0.3 billion in 2017 to a forecast of $5.1 billion in 2024.
That's substantial growth in underlying profitability over that period. Very significant trajectory.
It is. However, the stock performance over the last 12 months hasn't reflected that. It's down 45%.
Oof. Yeah, that's a big drop. And that's precisely where the source suggests the opportunity might lie.
How so?
Well, despite that pullback, AMD is still a giant. Market cap around $152 billion. The source suggests a purchase target below $80. The argument seems to be that this recent market correction might be overdone, considering AMD's strength in diversifying into AI.
Because AI demand just keeps growing, right? Data centers, machine learning.
Exactly. Those areas need sophisticated chips, and AMD is a key supplier. So the thinking is, maybe the market's short-term pessimism creates a long-term buying opportunity for patient investors, despite that recent 45% performance.
So the current lower valuation could be an entry point for exposure to that long-term AI growth trend, even with the risks.
That appears to be the angle the source is taking. It acknowledges the volatility, especially in semis and AI-related stocks, but suggests the potential reward might be worth it over time.
Okay, that makes sense. So just to recap the three stocks highlighted by our source today.
Go for it.
We have Crowdstrike and Zscaler, both strong players in the booming cybersecurity sector. Different angles, but both benefiting from high demand and recurring revenue models.
Right. Crowdstrike maybe is the more established, stable leader. Zscaler perhaps more focused on that high-growth cloud security innovation.
And then there's AMD, a key semiconductor company deeply involved in AI, which has seen its stock take a hit recently, but, according to the source, might present a rebound opportunity due to that AI tailwind, though you have to weigh the geopolitical risks.
Exactly. Three distinct profiles, really. Different sectors, different risk levels, different potential rewards. CrowdStrike for stability, maybe Zscaler for cloud innovation growth, and AMD for that AI potential mixed with semiconductor cyclicality and risk.
So for everyone listening, it's worth remembering these are presented as growth ideas within a pretty volatile market overall. The source sees opportunity, but you really need to consider your own risk tolerance and investment goals.
Absolutely. Which sector resonates most? The sort of non-negotiable need for cybersecurity, the rapid innovation in cloud, or the, potentially massive but maybe more volatile future of AI hardware?
That's the key question. And the source kind of leaves us with that. Which of these three looks most promising to you? But maybe we can push that a bit further for our listeners.
Yeah, how so?
Well, beyond just a gut feeling based on this overview, what kind of deeper dive would you do? What other factors or metrics would you look at before making a decision on any of these?
That's a great point. You'd want to look at competitive positioning in more detail, wouldn't you? Customer growth rates, maybe management commentary on recent earnings calls, debt levels.
Right. And maybe think beyond just stock performance. What are the broader implications of cybersecurity trends or AI development? How might those factors influence these companies long-term in ways maybe not immediately obvious from the stock chart?
Exactly. What are the second and third order effects? That's where the really interesting thinking happens. Lots to mull over there.